Hello folks, this is Naim Aslam, Chief Market Analyst at AvaTrade. I hope everyone is well. So let's begin by asking the most fundamental question, which is if all of you guys can hear me. So please say yes or no if you say yes if you can hear me and the audio is okay. Okay, and you can see my display as well. Everything is fine. Wonderful, wonderful, great. Okay, thank you. Well, thank you so much, guys, for first of all, as always, taking the time out to attend this webinar. This is especially important for you guys to be part of this community, to take part in all of these opportunities, because this is a real opportunity for you guys to learn, to understand where the markets are and what to make out of it, because the most important element when it comes to the markets is filtering the noise, right? Because when we read enormous amount of news media, news reports from various different news outlets, it's just difficult to make sense, because on the days when the markets are trading higher, all what we get is that yes, everything is hunky-dory, everything is back on track, and then the market is just going to continue, and it is going to tear any ceiling in its way. But on the days when the markets are down, all what we hear is that yes, the everything has just gone haywire, and now this is the end of the world, and just sell as much as you can, and then before you know it, someone else is buying on the other side of that trade, and then this panic, which is currently in the market as well, is really making you liquidate your positions at a point when you perhaps should be managing those positions more actively, right? So that is the most important thing. So we will begin the webinar shortly, but before we do that, just a little bit information about myself to share with you guys, and of course to understand a little bit more about you guys as well. So let me begin by sharing something about myself. So I work as a chief market analyst at AvaTrade. I had the research department at AvaTrade. I come with a wealth of over 10 years of investment banking experience. I have worked with institutions such as Bank of New York Mellon as a hedge fund trader, and with Bank of America as an equity trade on the equity side as well. So yes, over the years I have seen several different downturns and upturns. So do understand that how these markets really react in a situation like this. So now, perhaps it is your turn. So this is where I need to ask some questions from you guys. So please say yes but only those people who've been trading the markets for the last, let's say, 6 months to 12 months. Okay, so we are getting a lot of yes. Okay. Now please stop and please say yes if you have been trading the markets for over a year and less than 2 years. All right, okay. So I would say that the majority of the people who are in this webinar, they are pretty much beginners to intermediate level. And this really helps me to understand my audience as always, because I don't want it to explain things at a level which doesn't make sense for you guys at all, and then it just turns out to be that okay, of course it is a very valuable information, but we don't know what to make out of it, we don't understand certain terms, and so on and so forth. So this is why it really helps me to understand that bit, so that how low in terms of sensitivity, in terms of a complexity, I have to go to do that. Now, before anything, as always, the most important thing is disclaimer and risk warning. So anything which we'll be discussing in this particular webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Please note that nothing from this webinar can be perceived as an advice. This is purely for education purposes only, and the full disclaimer is right in front of you, right? Now, for those of you who like to contact me or who like to contact AvaTrade, the best way to do that, as always, is to contact me through Twitter. Now, if you do not have Twitter, you must have Twitter. Why? Because we are living in a world where news actually break out on Twitter first before they go on to the actual normal news outlets such as Bloomberg and CNBC. Now, especially with Donald Trump being in the office over the last few years, he is very, very active on Twitter. And then all of those stories which are really market moving, doesn't matter whether you are trading commodities, equities, or Forex, they really impact the markets. And by the time you will start hearing anything on the media, by the time you will start hearing anything on the news sites, it will be already too late, because the market would have already moved quite substantially from that point. So this is why it is very, very important for you guys to have Twitter and follow appropriate people on that. Now, let me give you an example, and then let me show you the Twitter accounts that I hold. Of course, AvaTrade. So let me begin by going to this particular one. First of all, let me get rid of this. Right, this one is here. So this is our official AvaTrade's Twitter account. So please make sure that you understand where the handle is, and make sure that you follow us. And similarly, this is my Twitter handle. As you can clearly see there, that I am very, very active in on my Twitter. We post a lot of information on that. So this is the sort of information which really, really, really moves the market. And this information gets published on Twitter, on anyone's Twitter, well before then you will see them on any other platform. So this is why it is very, very important for you guys to be active, ask questions, whatever you need to, and share your opinions, and then really have that connection going. Now, let's go back to our presentation. So on a daily basis, in terms of content, folks, on our YouTube account, avatrade.com, we have two major videos that I do post. One is your fundamental video, right? The purpose of this fundamental video analysis is that, yes, on AvaTrade.com, let me go back to it again. On AvaTrade.com, you do have this major research which really talks about a lot more in a lot more depth, a slightly bit more complex, but it's still, you know, something that traders can really understand and then they can relate to. So the information is there, and then and some of them, you know, they are very special reports as well, and then just really talk about that what exactly is happening in the markets and then what to really look for. But the more important thing is that on AvaTrade's YouTube, so all you got to do is type over here as AvaTrade, right? Go to AvaTrade, and this is it. So what do you do over here is that on a daily basis, I post two different sort of videos. The first is on reactive. So let's pause that. Here we go. Right, so over here, so what you have is, as I was saying, on the fundamental video is a little bit less complex. It is something for you guys to understand that okay, what to look out for in today's market, how it is going to impact the market, what instruments it is going to impact on that particular day. Simple as that. Very short, small video between 5 to 6 minutes maximum, or 7, and then you get all the nuggets with that. And then after watching that, you get really good understanding where the markets closed yesterday and why they closed at that level, where the markets are starting today, why are they starting, and what to look out for throughout the day. So this is why it is important. You know, this fundamental daily video is very, very important and particularly geared for that segment. As for the technical analysis video, this is a bit more technical analysis on a specific derivative on a specific day. For example, today Netflix, it is all about Netflix, blowout number what came out yesterday, and then we looked at the important level of support and resistances, and then we talked about that what to really look out for in terms of those levels, right? So, and then of course, as a bonus, we also have the coronavirus update and its influence on the financial markets. So please do check out all of those videos. Now, in terms of agenda, what is on the agenda today? In today's masterclass, which is like how to trade indices or why to, so the first and most important thing is that what kind of indices are there, right? So what to really look out for in terms of indices. And then secondly, we will discuss why to trade indices, when to trade indices, the current state of markets and analysis, obviously, defining levels and defining a strategy. Now, let's begin with the first question before anything. In terms of indices, if you want to trade the UK equity market and you wanted to trade the most 100 famous stock, then all what you got to do is you got to go and then trade the FTSE 100 index, right? Because that FTSE 100 index, let me go to MT4 platform, and as always, this platform can be downloaded from AvaTrade's website. So the FTSE 100 index will have all the important stocks that you can possibly think of, and then this is it. So by looking at the FTSE 100 index, when you buy and sell that, you get an exposure to all of those particular stocks within that index, right? But now if you say that, okay, you know what, I am not interested in trading the FTSE 100 index, I wanted to trade American stocks, I wanted to trade as many American stocks as they are in the index, then what you got to do is you got to go and then look for the S&P 500 index, which is right over here. Forget about any levels or anything with that. I'm just keep breaking it down for simple traders to understand. So this will give you an exposure to all the S&P 500 stocks, right? So rather than holding individual stocks like Netflix, for instance, today, IBM came out with earnings yesterday. Last week we had earnings from JP Morgan, Morgan Stanley, Bank of America, Goldman Sachs. The list goes on, and then throughout this week, and then the next week we're going to have a bigger earnings like Apple and so on and so forth. So what you could do is, you wanted to have an exposure to a bigger market, you wanted to have an exposure to the US market. All what you do is you go to the US indices and then you pick up S&P 500 index. Now the difference between the three different indices within the US, because over in the US we have three different indices. Firstly, it's the S&P 500 index. S&P 500 index represents a wider group, a wider color for the market. It really tells you what exactly is happening in the market. But having said this, it is important to keep in mind that the S&P, the weighting of these indices, the S&P 500 index is heavily weighted for a few major stocks. And then some of those major stocks, they have the ability to move the index massively. Similarly, when we look at the Dow Jones, Dow Jones 30, that has an exposure to top 30 Dow Jones stocks. And again, some few stocks within that, they have more weighting than other stocks. So meaning when any of those major stocks move, the entire index moves more, right? And it doesn't necessarily mean that all the stocks, all the US market is really moving. Now, if you are a tech savvy investor, if you like to invest in tech, then you really got to be looking at the NASDAQ 100 index, because NASDAQ is pretty much known for its tech stocks, all the FANG stocks and then microchips and all of that stuff, especially with the like of what is happening today, the environment that we are living in, and under the COVID-19 lockdown situation. You wanted to have an exposure with the companies like Zoom, and then of course, Microsoft and like there's so many different tech companies that I can really sit here and talk about. But so if you wanted to have them, then NASDAQ is your place to have that. So that is the major sort of a difference. Similarly, over in Europe, if you wanted to trade the French market, then you go to CAC. Then if you wanted to trade the IBEX, the Spanish, then you trade the IBEX. And if you wanted to trade the entire Eurozone, then you can trade through Stoxx 600 or Stoxx 50 index. Now, is everything clear so far? Because I have taken things to very elementary level in order to build that momentum with you guys. Any questions so far with respect to it? Remember, there is no such question which you say that, okay, it's not a clear and blah blah blah, it's not a suitable question. There's always a good question, so always feel free to ask them, right? Long-term strategies, please. Yes, we are getting to it, don't worry about that. Now we are moving on to the part of markets and analysis first of all. So let's begin by looking at the US indices first. I will go a little bit more slow with the US indices, and then we will walk a little bit more fast as we go along, because the analysis is going to be pretty much the same. The indicators are going to be pretty much the same. And then this is what primarily I will be looking at. So with respect to the S&P 500 index, folks, first of all what you have to do is go on to the S&P 500 index, switch the time frame to your weekly time frame. Why? It is very important for you to know what is the market doing on a bigger time frame, because if the bigger time frame tells you that the market is an uptrend, like how the market was in an uptrend right over here. So if you draw the trend line by joining this low and this low, you will see that the trend line straight going from here, right? So you will know that, okay, the markets are in an uptrend, that's okay. But right now, the markets are no longer in uptrend. Market has been absolutely in a massive sell-off. During the month of March, we've seen this sell-off, right? And then late March, early April, especially, we've seen this huge, humongous upward move, which the market pretty much has recovered more than 50%. For the S&P 500 index, you can say it has recovered more than 50% of its losses, right? Now, what was important and how I was looking at the market when the market was falling, right? When the market was falling from its top to in around here, what I was really looking for at the time, I was looking for the markets to drop over 40%, over 50%, over 60%, and 70% even. If the markets would have fallen over 50%, I would have been, deploying more capital. 60% would have asked me to deploy even higher, and then so on and so forth. But the market fell in around about 30 to 40% for most of the US indices, and that did require some capital deployment from my side, but I didn't go all in. I went in, I said, okay, 40% to 35 to 40% drop requires me to deploy 25% to 30% or maximum 50%, even that, right, of my capital, because I always wanted to leave a bit of room for myself, and I always wanted to be a bit more cautious on that, because if the market continues to fall, I wanted to buy them at a lower levels for sure. So when the market was falling, that's what pretty much we were looking at. But the major element, in order, when the market started to bounce back up, right, and then we were trading in around here, the first thing that we were looking at was that, okay, where the price is trading with respect to 200-week moving average, which is shown in green. When the price came into 200-week moving average, as you can see over here, let me just maximize a little bit more, and then forget about any other lines. This is your green line right over here, right? So when the market came, it failed to break above the 200-week moving average, and then it failed to break above the 200-week moving average in the second week. But because we already had two major we already had two major tests of this moving average, we were pretty much sure at the time that, okay, if the price breaks above the 200-week moving average, then it requires us to deploy a bit more capital. So that was one of the clues, right? And then the market did. Then the battle started to happen with the 100-week moving average, and then this is what happened. The price came into this one, and it started to battle with the 200-week moving average. But so far, the price hasn't been able to cross above that moving average, as you can see. And this means that if the price cannot move above the 100-week moving average, that means it is going to go back to 200-week moving average. And it is highly likely that this 200-week moving average isn't going to hold. Why? Because the earnings season so far has been pretty weak, and then that message has been pretty similar for all other stocks for the US equity market, because earnings season is bad and it is only gonna get worse in Q2. So holding any upward position right now, it doesn't really make too much of a sense, because the outlook doesn't look good. The recession is imminent, and but perhaps not depression. As long as there's no depression, this move to the downside, perhaps, the worst case scenario perhaps we are looking at is to revisit this COVID-19 lows. If that happens, that would be wonderful opportunity. If it drops a bit more low, then we are looking at these levels of support. Please make sure that you take snapshots, you take a screenshots of these support levels, because they are very, very important one, because this is where almost about 50% of the drop would have happened. This is over 50% right over here. So these are the areas where you really wanted to do. Now, you may be wondering, why do I have the Fibonacci ratio? The Fibonacci retracement is quite helpful with respect to the price movement, because if the price can break above the 23%, then we know it is a pretty good treatment. That means that the momentum is pretty good to the upside. And then when it breaks above the 38%, it further provides the surety that what we've discussed over here, our reviews over here were pretty firm, and then market is going to continue. But once it crosses above the 50%, now not that only market has recovered 50% of its losses, but the momentum is also there. But for the momentum to really continue to the upside, we really want the prices to break above the 50-week moving average. Now, if the price moves above the 50-week moving average, that's it. COVID-19 low is in place. And then as long as the price stays above the 100-week moving average, the only way for the markets to trade from here is to the upside, not to the downside. The opportunity is gone. The next opportunity will be these previous resistance level becoming your support levels. Now this is your support level where the price is trading, and then if price moves back up, right, and then which kind of really happening right now in today's market. Now let's switch to the daily time frame. Now all what we can do is, we don't really need the Fibonacci ratio that much, so we can really get rid of this Fibonacci ratio and then just focus on support and resistance levels. So first of all what we got to do is we got to look at where the price is trading now. Obviously, the price is trading above the 50-day moving average now, because we moved into the daily time frame. And as long as the price stays above the 50-day moving average, it will confirm that yes, it is highly likely that the momentum is going to continue. Obviously, these resistance lines were drawn well before that, and then we really looked at this resistance area. The price did come into this resistance area, and then it started to ease off from that resistance area. Now it has entered into this area of support. If this doesn't hold, then the next area of support is really going to be in around this mark. And if it doesn't hold, then just again, we'll switch it back to weekly time frame. And if the price cannot stay above the 100-week moving average, the only way it is going to go to the downside. So this is a very, very simple strategy. This is a very, very simple technical analysis, by not adding, not complicating things, by just looking at the price action with respect to the moving averages, and then determining our buy and sell levels with that respect. The simple is that if the price is below the moving average, the momentum is not there for the upward side, for the price to continue its upward momentum. If the price is above the important moving average, then that means we are pretty safe. Try to look for the closest support zone, and then just try to place stops below that. And then perhaps if it measures if it fits within your risk profile, then there could be an opportunity there, but nothing more than that, right? Now, does that make sense before I move any further? Any questions so far? Okay, great. So now we've done that S&P. Now let's quickly move into the Dow Jones. Now, folks, again, we've gone on to the weekly time frame. Ignore this Bollinger Band. It's nothing. It's just nothing but noise right now. What we are looking at with respect to the Bollinger Band is again your 200-week moving average, your 100-week moving average, and your 50-week moving average. Obviously, in the S&P 500 case, we went well above that. We went to, that there's a battle with 100-week moving average, but in the S&P 500 case, that is not what it is happening. The price has failed to stay above the 100-week moving average, and it is moving lower from here. And as long as the price continues, if the price doesn't stay above the 100-week moving average, the chances of the price to stay above that or for any upward move for the Dow Jones index are minuscule. It's pretty much dead, because if the price cannot move above the 200-week moving average, you cannot literally say that the price is that the Dow Jones is going to move higher. Right, so that this strong upward momentum. Let me just get rid of this Bollinger Band, because we really do not need this. We only wanted to keep things simple with respect to the moving average. So this massive upward trend, which, by the way, started back in 2007, as you can see, and then this opportunity came right here into this area of support right overhead, as you can see. You can clearly see that, if the price cannot stay above the 100-week moving average, then the only way for the price to go from here is to the upside. But as you can see, if it can't stay up, then it is going to go down. Then your level of support under those circumstances is going to be this area of support right over here. Then the price perhaps comes over here and revisits that. If the price comes and revisits that area, that would be a wonderful, wonderful opportunity to get back into the trade. And keep in mind that the price can continue its move to the downside. It can come into the next area of support, which is the next area of support is going to be right over here. Let me just make it a little bit more defined. Just over here, right? So this is going to be the next consolidation area of support is going to be your area. This is going to be your area of support. And as always, I kind of prefer to move the color, to change the color for support zones to green. So all what you got to do is double click, right click, not over here, apologies. Let me just move this again, double click. We go right at the bottom of these candles, and then go to horizontal line properties, again, change the color to green. The reason that I like to do this is because I don't want it to get confused during the time of a massive turmoil by looking at the chart and then trying to see, is that my resistance zone? Is that my support zone? Because if I have trained myself that if I look at the price action, I'll know that whether that's a support or resistance zone. But under the extreme stress level, that the last thing that I wanted to find out is that, okay, whether that's a resistance or support level, right? That is not what we want to do. So in terms of a resistance, what we got to look at is that if the price continues, if the price breaks above this level, right? If it moves above this level of support, then the next level of resistance for the price is really going to be in around, not this level of resistance. It is going to be slightly just over here. This is going to be the resistance where the 100-week moving average is. And as always, feel free to always keep everything same, so that when you look at the chart what to make out of it. So again, we're going to change the color to red. So that is your S&P 500 index. Now, let me quickly move to NASDAQ. I'm not going to draw any support or resistance level, just going to quickly show you the same concept with respect to it. The NASDAQ 500 index, when the massive sell-off happened, it never dropped below the 200-week moving average. In fact, it came and it touched that level of 200-week moving average, and it bounced back up. But now the most strongest index out of the other two indices has become somewhat weak index, because if you see the sell-offs which has been taking place for the last few days, it is more intense on the NASDAQ index, and it is only going to get worse as we move into next week, when Apple and other major companies are going to start announcing their results. And then that is why I believe that the chances are quite high for the markets to move lower. Okay, I'm just going to go through some of the questions very quickly, see what people have been talking about, if there are any major questions. How do you figure out the support zones? The support zones, all what you have to do is you have to look on the left side, and then you look at the zones where the prices are, and then determine that. So for instance, when I look at this particular chart, right, for me to look at the support zone, any particular support zone, what I'm going to do is I'm going to look at where the price is trading right now, and then I'm going to start looking at the left-hand side. I'm going to see where the important level of support is. Now I can see that important level of support is this is the area. This particular candle really stands out for me. Why? Because this is where the rally really started as well. And then this also gives me the opportunity to encompass the 100-week moving average as well. So I know that this is a pretty good area of support. Similarly, again, if I am going to draw another area of support, this is the previous resistance. The price failed to break above this level of resistance, right? Now previous resistance becomes support now, and then I know that when the price started to move higher, there was this massive sell-off in this area, and then boom, that happened. So this particular candle does have an importance, but overall I'm looking at the close of this candle, this particular candle, and encompassing some of this one. Then another question is coming in, do we have to use these moving averages? No, you don't have to use these moving averages. Of course you don't. You can use your own moving averages. These are simple moving averages, but these are the moving averages which mostly are used by institutional trades, these numbers. So please, if you move time to Apple or Tesla review, right? Okay, so as for Apple and Tesla, we will do a special technical analysis video during this week, so I wouldn't worry too much about that. Now, just to finish off quickly, let's quickly have a look at Brent, right? And then see where that is, because with the massive sell-off that we have seen, it is very, very tricky trade, right? Everyone knows about that. Now, with respect to how low this thing can go, really, this thing can go as far as it wants. If the WTI is of any reference, that means that this thing can really go all the way to zero as well. But with the Brent, it is not likely for this to go. But I think on a monthly chart, that's what really you've got to be really looking at. And then you really have to be looking at this area of support, which runs between 967 to 1596. This is a really great area of support. I think it is likely for the prices to move from this area of support, and it does make sense in terms of a price action. But what is should be your risk to reward ratio under those circumstances? This should be right over here, which I'm defining. So 31 to 35, looking at the area between 967 to 15. Obviously, the price has bounced back above this level. We were in this area as of yesterday. We saw the price dropping, massively to this area, as you can see, because the low was right over here. But now the price has moved back up, so wait for that. But I think, given the extensive moves that we have seen in oil prices, anything is really possible, if I be honest with you. But this could be a better area of support if we look at the Brent price, right? All right, folks, we're just a little bit above our time. That's all for today. Thank you so much for taking the time out and to attend this webinar. As always, I greatly appreciate all of your time. And if you have any further questions, remember, every single week we do this monthly Q&A session on AvaTrade live session. So feel free to join that and ask as many questions as you can. All right, that's all for today. Enjoy and see you.